Welcome everyone to Vested Interest. This is Shane back again for their stock pick of the day video. It is November 30th. Say goodbye to November. Last day of November on into December. Tomorrow we go. So hopefully you got your November investing in the books. We are going to take a look at another subscriber request here. Tanya Myers, I believe I got your name right here. You've suggested a couple, so appreciate the suggestions. We are going to take a look at ticker MOV. That's Movado or Movado, Swiss Heritage Modern Design. They are a consumer discretionary company that provides jewelry, watches, that sort of thing. So let's jump right in the video and check it out. And if you have not checked out, it's a little outdated now, but the November stocks to buy, 4 stocks to buy in November, that's what this comment was on that video. So go ahead and check that out. I will have one coming up tomorrow on Friday, the 5 stocks to buy in December. So tune back into the channel for that one. If you have not done so, hit the subscribe button down below. Join us on this journey to financial freedom. Hit that notification bell so you don't miss any content that we push out, like the 5 stocks to buy video that'll come out tomorrow, or like our stock pick of the day series. That's what this video here is. We do that Monday through Thursday. So again, join us on this journey to financial freedom. Hit that subscribe button down below. Let's jump right into the video. And if you want to know more about this company, check them out at www.movado.com. That's www.movado.com. That is their homepage where I pull this information from. So again, they provide, watches, jewelry, men's and women's. That's pretty much their bread and butter. Some of the jewelry, I don't know what Kenny Scharf ex Movado is, but fine jewelry, bracelets, earrings, necklaces. I do have 2 daughters, and my wife likes jewelry, but I'll be honest, I get a lot of my jewelry from a company called Mene, M-E-N-E. They provide very nice jewelry, but it is pretty much 100% gold and 100% platinum. And I do it as a sneaky way to invest in precious metals. Not only does it get me some jewelry for my wife and my daughters, but it also is a way that I'm investing in precious metals. So plug there for Mene. Even though I am not an affiliate of Mene, it is where I buy jewelry. I was not familiar with this company until we saw the suggestions. So that is part of the reason that I like suggestions from subscribers. It does get me out into some areas that I don't typically cover. So let's continue on with this one here. Movado, ticker MOV, out of the consumer discretionary sector. Started in 1881. Their founder, Achilles Dietishim, a 19-year-old entrepreneur, hires 6 watchmakers and opens a small workshop in the village of La Chaux-de-Fonds, Switzerland. So this company started in Switzerland. Not surprising, right? A lot of very good watches come from Switzerland. I don't wear a watch, but if I was to get one, it would probably be a Swiss made. So it's been around for a long time, 1881, right? That's well over 100 years now. So obviously they're doing something right in providing a service and materials and items that people want to buy. So again, www.movado.com. That is their homepage. Go ahead and check them out if you are interested in the company or you're looking to buy some jewelry or a watch. Now, the reason we're taking a look at them today, down 9.77%, huge drop on the day. Just like we saw yesterday with the company Cigna, anytime I see a huge drop like this, I am going to check it out to see if there's any potential value, especially one that pays dividends. That's what we focus here on this channel, dividend growth investing. So we are talking about Movado Group, ticker MOV, out of the consumer discretionary sector. Close out the day at $26.15. 52-week range as low as $23.94, as high as $37.28. So they are very close to their 52-week low. Average volume 117,000. Current volume today was 382,000, and just a sell-off, right? 9% drop on the day. People were jumping out of this one. A lot of people, and that's not a lot of volume, right? So this company may be one that is overlooked. Market cap of 579.123 million. Beta of 1.22, so they are more volatile than the overall market. Price to earnings ratio, PE ratio on this one is low at $8.57 per share. Nice EPS, earnings per share, sitting at $3.05 per share. Earnings date was November 30th, so that was today. There may have been or must have been something in their earnings that people didn't like, so you might want to look at that and see what's going on with their earnings. Did they meet revenue? Did they, miss their EPS estimates? Did their forecasted projections go down? Are they anticipating a recession, which a company like this, I would assume, is cyclical? When the economy is doing well, people might be looking to buy jewelry and watches. But when the economy is doing bad and we're in a recession, people are not going to be running out buying watches and jewelry. At least not as much as they do maybe for special occasions like Christmas or birthdays. But those are the things people are going to pare back on before they pare back on food, electrical, heat, that sort of thing. For dividend, $1.40. They are a quarterly payer. We'll see that here in a little bit. Very nice starting dividend yield on this one, 4.83%. They do have a low payout ratio, under 50% at 45.90. So a lot of room to increase that with a very nice starting dividend yield and such a low payout ratio. It's a pretty good combination. Ex-dividend date was September 6th. Looked like they paid it out on September 20th. So you would be in line for the next dividend payout if you bought them now, though you may have to wait a little bit since they just paid out in September. And a one-year target estimate, at least according to Yahoo Finance, of $41 per share. So they see a significant upside in the stock price on this one over the next year anyway. Now, I like to get into statistics, look at dividend yield theory to see if we are presenting any value. To do that, click on statistics, go down to dividends and splits. Look at their 5-year dividend yield average, 3.29%. Compare it to its current 4.83%, and it is much higher than their 5-year average. So since it is higher, this is inversely correlated. It means the higher it is, the more potentially undervalued it is. If this number was lower than their 5-year average, it would be overvalued. And depending on how much lower it was, that would be potentially how much overvalued it is. But again, this one, since it is higher at 4.83% compared to its 3.29 5-year average, is potentially overvalued and potentially significantly undervalued as well. Payout ratio, as we saw, low, 45.9%. Now, we need to get into the financials of the company. If you are picking individual stocks, you need to understand the financials. You need to understand how they're making their revenue. Is their revenue growing? Are they paying down debt? What do their debt to assets look like? What do their debt to equity ratios look like? Is their revenue growing? What does their balance sheet look like? What does their income statement look like? Are they paying down debt? All that is information you want to get in and look at. For our purposes, we want growing free cash flow because dividends are paid out of free cash flow. And typically, when a company has growing free cash flow, they have growing dividends. And we want growing dividends over time as dividend growth investors. At least I do. So went back to 2020. You can see 19 million here in free cash flow. 2021, big jump up to 65 million. 2022, even bigger jump up to 124 million. Now, here's where things get a little wonky. So far in 2023, 47 million, but then they say to date 80 million. So overall, from 2020 to date, I would say growing free cash flow. And not only is their free cash flow growing, but they are repurchasing their own shares, as you can see here. So far, numbers don't look terrible. Now, I would really need to do a deeper dive on this one. I am not familiar with this company. First time I've ever looked at it. So I would need to compare them to some others in their particular sector here in the jewelry watch space. I don't have anything like this in my portfolio. Let me know if you have any other companies that are like this that I could compare them to. I would do more research on that to see where they're at. Looks like they're pulled back a little bit more in the after hours as well. But big drop on the day. May be time for something like this to be presenting value with a big drop like this, though you would want to understand with this earnings date what is going on with their projected earnings and understand that if we do go into recession, this company may be further hit. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You pick out any sources that you like. These are just two that I like. Stockanalysis.com goes back a little bit than Yahoo Finance, and I like it because it presents the information in a nice, easy to digest format. Again, you pick any sources that you like. Just make sure you're picking more than one, at least two, if not three, to make sure that the information you are getting is accurate and up to date. This one did say they recently updated this information on September 29th, so it's a couple months outdated, but that is nice to see that it has at least been updated in the last couple months. According to the two stock analysts, they do not have a lot that have looked at this. Again, this is not one I was familiar with, so it may be one in a niche market or just one that does not get a lot of attention, which sometimes is good. If you have stocks that aren't getting a lot of attention, they're usually less volatile, and they may be the places you want to be. You're not going to beat the market and beat other investors by being in the same stocks they are. You need to look outside those. So again, that's part of the reason I like suggestions from subscribers or from viewers of the channel. It gets me out into areas I wouldn't normally wander. But according to the two stock analysts that have looked at this, they call it a consensus buy, and they have a low estimate of $32. Which it currently sits lower than their lowest estimate. So that would be a 22.37% increase in the stock price if it was to come back up to their lowest estimate. Average estimate of $36.50. That would be a 39.58% increase in the stock price from where it currently sits. And if it happened to hit their high of $41, that's pretty much in line with what we saw with Yahoo Finance on the previous page as well. That would be a 56.79% increase. All the while, you could collect that 4.8, almost 5% dividend yield along the way if you were to buy them now. Now, I like to get into the statistics on this one. Look at return on invested capital and return on equity to see how return on equity and return on invested capital to see how the company is investing back into itself, how well it's doing with its own funds. And I look for 10% or better. On this one, we're looking at return on equity of 14%. That is above the 10% I'm looking for. And return on invested capital of 11.61%. That also beats the 10% I'm looking for. Now, I usually look at earnings per share growth, EPS growth. I like 5% or better. They did not have an estimate here, so I would have to do more of a deep dive to figure out what's going on with their estimates. And that's possibly, since they just updated today, possibly why these are not listed. Because if they updated back on September 29th and today was their earnings date, usually they update them right after earnings. So this is just not up to date right now. I would tune back in a couple of days or look back here at this site, stockanalysis.com, over the next week to see if they plug in this new EPS and revenue forecast. They don't have either of them listed. Now also look at the dividends. Again, low payout ratio, under 50%. I think the Yahoo Finance said 45%. This says 46.05. I mean, very close to each other. Now this dividend growth, I don't necessarily agree with. It says negative 18.68. But as we walk through this, I think you're going to see this is another company that pays some special dividends. So it impacts this dividend growth. So this is not accurate. You can see right here this $1.35 that really jumps out compared to the others. Well, that looks like a special dividend to me. So that really impacts this dividend growth. So let's look through here. Anyway, 2019, they were paying 19 cents and a fraction of a penny. January 20th, 2021, they did drop down a bit. So January looks like that may have actually been a special dividend as well. Right, because they pay on the April, June, September, December, April, June, September, December time frame, but then this one in January jumps out. So I believe this was a special dividend as well here in this one, because then it's right back to 0.193% again. So I'm going to count that as a special dividend. I believe that's how it was. Tanya, if you're watching, let me know. I believe that was a special dividend, just like I believe this one in April, just because it's so much higher. I know they pay out typically in April, but I think this was part of a special dividend payout right here. I don't anticipate them paying that. It looks like they pay the regular 35 cents plus $1 special dividend on that. So let me know down below in the comments if you watch this video. But December 2021, they jumped it up to 24 cents. I believe that one actually does look like it dipped back down because that's in line with their regular payouts on December. But then back April 5th, 2022, they jumped it up to 35 cents. Then 35 ran that all the way to this special dividend in April 2023 up to $1.35 and then right back to 35 cents. So they have kind of held it at 35 cents and they are counting the drop back to 35 cents from the special dividend 135 down to 35 cents. That accounts for that 18.68% decrease. So they are a little bit, I mean, overall 19 cents to 24 cents to 35 cents and then account for the special dividend. Overall, I would say they're growing dividends over time. They just grow them a little differently than I would like to see them, steady Eddie growers. But they kick in some of these special dividends from time to time. So that is good. They're rewarding their shareholders accordingly, it looks like, for holding this one, and a very nice dividend yield as well. I would also maybe do the math and make sure that the dividend yield at 4.8% is not accounting for this special dividend here paid out, and it is just on this 35 cents. This is the vested interest stock screener. This is how I look at the company on a high level like we just did. It's also how I set up the videos. You can pause this and go through it. It must meet 5 of the 8 to be investable. If it is a company like a bank, a financial company, it must meet 6 of 9. I throw in price to book on that. You can use price to book on any company. Just for typical banks, 1 being fair value, anything under 1 being undervalued, anything over 1 being overvalued. For other price to book on companies, make sure you're comparing it to other companies in their industry average. That one rule of thumb really works for financial companies. It doesn't work for them all. Well, that is it for this one. Let me know what you think of Movado. You know, are you a shopper or a user of their products? Do you own any of their watches? Do you own any of their jewelry? Really appreciate the suggestion, Tanya. Again, let me know about the dividends in the comment section below. I believe those are in line with the exception of a couple special dividends that were paid out that we looked at. But that is it for this one. Appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks like this that we may be watching or avoiding altogether. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So go ahead and drop them down below. If you have a company you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section and I'll work it into the rotation just like I did here for Tanya. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can money to never invest any amount of comfortable losing. Always do your own research, must based on your situation, circumstances, and self criteria, or seek the advice of a certified financial advisor.